Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I thought today we could go through Polestar's financials and see how it compares to Tesla. Now, just to be clear, I'm not some Tesla investor in his ivory tower looking down and laughing at any potential BEV competitor to Tesla. We've done the numbers. No other BEV manufacturers will have any effect on Tesla's growth plans. Having said that, I also get cross when I see these companies lying about what they're capable of, so perhaps some frustration comes out at times. Anyway, I like to study the EV industry in general as I find it interesting, and I still like to compare where the rest are with Tesla and how close they are to catching up. I don't laugh at how far behind they are from Tesla. I take satisfaction in how far ahead Tesla are from them. It's Tesla that's doing an amazing job, not so much that everyone else is just doing a really bad job with EVs. It's just that Tesla is doing a beyond exceptional job with them. Tesla and Elon would have done an exceptional job in whatever industry they went in. They chose cars and ripped the industry up. Anyway, no one is close to catching up, but Polestar is a pure EV company, so we may be able to get some good intelligence on other EV finances, although Polestar did initially start as a hybrid. Just to quickly fill you in on Polestar, it was Volvo's high-performance label, like Audi's RS line or Mercedes AMG and BMW M. Volvo was acquired by Geely in 2010. It has since gone public recently on June the 24th under the Gores Group SPAC with ticker symbol PSNY. Currently, it's down 30% from its IPO. They started with a hybrid sports car, the Polestar 1, and then went to an all-electric Polestar 2 in 2019. So let's find out how they've been getting on. Now, this isn't going to be a review of the Polestar 2. I am, however, trying to arrange a test drive for that car, though, so look forward to reporting back on that. Polestar placed themselves in the premium luxury EV market segment. They think that market was 1.4 million in 2020 and will grow to 4.9 million in 2025 at a 29% compounded annual growth rate. I think Tesla's growth alone should have been about that. Therefore, if Polestar were to have any market, they've likely gotten the growth rate incorrect. Anyway, they think that equates to approximately a $300 billion industry that they're in, which, as we know, will only happen if Tesla makes that many vehicles. And they're talking about the luxury EV market, which actually really just means long range when it comes to EVs. The costs are in the batteries. The luxury industry cannot be grown with LFP cells. They require nickel-based cells, which take so much longer to set up for manufacturing. Polestar present this almost as if it's what the demand will be like in the future. But no, a graph like this would only be representative of how fast nickel cells can be made, not how much demand is going to increase over the next few years. They claim to be the only global EV pure play alongside Tesla. Alright, but if we renamed that to BEV player, then they wouldn't exist under any of these labels. Admittedly, the hybrid isn't their big seller though. They claim that NIO and XPeng, despite also being global EV pure play companies, they're actually predominantly regional companies, so they actually don't count. Basically, when it comes to EVs, there's just Tesla and Polestar. And they go on and on about how they're doing good for the planet, ethical practices, carbon neutral, etc., which is great. But I can't help but think they're only doing this because of Tesla. Tesla's entire company is about this and for this. It just feels a bit like a side dish for Polestar. They just want to make cars that make profits. You have to remember, none of these other companies have a real soul and mission like Tesla. And wouldn't you know, they think they can grow at a faster rate than Tesla, with a 78% compounded annual growth rate going from 29,000 in 2021 to 290,000 in 2025. And by 2025, an EBIT margin of 8%. And a break-even EBIT by 2024. FYI, that comes in at 24,000 units a month, or 5,530 a week. Wow, that's past volume production. Maybe they can be profitable. Oh wait, this is to be achieved with a diversified premium product portfolio, which will actually consist of 4 models. Okay, well if they each sold equal quantities, then that would be an average of 1,382 a week, or 6,000 a month. Wow. Tesla make about that many Model Ys in Berlin currently, and it sounds like Tesla are losing a lot of money doing that. Tesla also sell their cars for a higher price. Tesla pay less for their materials of the car. Tesla spend less in producing the car. Tesla have significantly lower relative OPEX too. Oh dear, we haven't even gotten to the financials yet. Alright, let's move on to the financials. 29,000 sales in 2021, generating $1.3 billion. That would mean an average selling price of just $46,000. Quite a bit lower than Tesla these days, being above $50,000. Okay, so we know revenue. What was the cost? It was $1.3 billion too. In fact, the gross profit margin for Polestar was 0.07%. That's right, their profit margin is less than 0.1%. FYI, I'm shocked. This resulted in a EBITDA loss of $756 million, implying that OPEX would be $766 million. Now, that is for the full year. That would be about $191 million a quarter in OPEX. That does actually sound quite low. I think it's actually too low, and they don't explicitly state their OPEX in the financials. And just to give you an idea of why I think it's too low, because NIO's was $500 million last quarter. Sure, NIO sells 3 times the cars, but that shouldn't matter. Anyway, I guess we'll find out in Polestar's full financials when they disclose the next quarter. I'm not sure about how much cash they actually have in hand, but they look like they're going to bleed about $3 billion just this year. At a guess, most of these companies have a burn rate of around 2 to 3 years. The issue is that there is no path to profitability here. What are they expecting? They cost as much to make as they sell, without leaving any money left to run the business, let alone make a profit. Their OPEX is going to get up to $500 million a quarter, or $2 billion a year. Now, if they could make a gross profit of $10,000 per vehicle, then they would need to sell 200,000 vehicles to cover their OPEX, assuming it hadn't increased. And that's just to make a profit. With an ASP of $46,000, then that becomes a gross margin of 21%. Of course, their ASP will rise with their larger SUV models. However, these are going to be in even lower production than the current Polestar 2, which means they'll struggle even more to get any margin. Alright, if Polestar can perhaps hit about 20% gross margin on their vehicles, then perhaps they'll get there, and they probably have enough cash to attempt it. The price of the Polestar 2 currently starts at about the exact same price of a Model 3 standard range, so it would be tough to justify a higher price tag than a Tesla, especially when you offer 30 fewer miles of range. Although that's not an issue, because currently they get $7,000 off in tax credit in the US, but that won't last forever. In other words, demand will likely drop for Polestar in the US when the prices increase $7,000. However, they're not able to reduce their cost because they lose too much money. They actually have to raise their costs to try and make a profit. So to have a chance, Polestar needs a market where people are willing to pay over $10,000 more for a Polestar in the US than they do today. And perhaps demand will increase that much that consumers will pay 30% more for a Polestar than they do today. Alternatively, Polestar can try and reduce costs. The best way to do that is volume production, but it would appear that Polestar are realizing early on that volume production simply isn't possible and could risk faster bankruptcy. Imagine production hell for a non-Elon company. I think we call that bankruptcy. If they can increase the speed of their production lines, then they should get a positive gross profit. To be honest, I think they should at least be able to get 10,000 units a month with the Polestar 2. Of course, we are perhaps too Tesla-minded and assuming here that just because they make them, they'll sell them. Perhaps they actually do have to consider demand. They can't stimulate any more demand by lowering prices, and equally, they may lose too much demand if they raise prices. Yeah, Tesla's pricing power is awesome. We know this industry is constrained by batteries and cells, so where are Polestar planning on getting their cells? It would appear no plans for in-house expansion and will be purchasing through Northvolt, likely at higher costs than other legacy autos like GM and Ford, who have their own factories. Polestar does have the support of both Geely and Volvo, which is likely of big benefit. And I would have thought that they can get halfway to volume production. 10,000 units a month isn't a lot to have to sell. They should have a large enough market for that quantity at their price point. Of course, it's tough offering such an inferior product compared to Tesla for about the same price. And Polestar seem to be pretty much going head to head against Tesla here. Like I say, I want more BEVs, but we can't just openly accept any new BEV player to the market. There's always the chance of another SPAC pump and dump, which is what most of the companies appear to be. They're attempting to ride off Tesla's coattails. Look, Tesla is worth $1 trillion. We can be too. We just need to make EVs as well. No, there's a reason Tesla and Tesla alone is going to be the only $1 trillion EV company, because it's Tesla, and there's only one Tesla. This is not a company I would invest in. There is nothing substantial jumping out at me here that makes me excited, not like Tesla's financials. They don't have plans for volume production, so I don't see how they can make profits. They're expecting to increase demand by adding more models, which it likely will, but it also means adding more costs. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.